Hello everyone, welcome to the Ichimoku charts.com daily analysis for the US dollar index for Friday, March the 12th, 2010. Well, quite a bearish day today, and we can see that as this first time frame downtrend that the market's been in with a series of lower highs and lower lows, the size of the body of the candle has actually increased. And that's a very solid sign for the bears. The bears are in the ascendancy in this market at the moment in the fast time frame, and the body of the candle is red, which represents the sellers making some very solid net bearish progress. And it's classic the way that the size of the body of these candles, the red candles, has been increasing as this trend has continued down on its way. And I think it highlights the strength of the bears in this market at the moment to the downside. Now, having said that though, there is some solid support down below that this market will interact with. So even though the bears are looking fairly strong, they've got control of this market and they've shown some commitment, although they did lose a bit towards the end of the day. The market will need to trade down below the 79.50 region, which may provide a decent area of support for this market before it trades down towards the cloud or the Kumo around the 78.94 region. So there is potential for that to happen, but we do need to bear in mind that there is support below. Now, the support around the 78.94 region is a previous area of resistance and support, but now also coincides with the area where the market may interact with the top of the cloud or the Kumo. And that will tend to be a very strong area of support for this market. Now, the market is trading up above the cloud or the Kumo, and that tells us the market has an overall positive bias, although we are now retracing back towards that area. The market, however, is now trading down below the Tenkan-sen and Kijun-sen, and if we look at where the market's closed today, this is the first time in a long period of time where the market has closed down below the Kijun-sen, so that may be very significant for this market in the medium-term perspective. There has been a major change of character in this market with that close down below there. Whether the market goes on with it or not, we really do need to watch how the market potentially interacts with these areas of support. The market has also penetrated a neckline of a head and shoulders pattern, and we can see here that we have the prior trend, and that's essential for any of the technical analysis patterns that we identify. We have to have the prior trend leading into the pattern, and we have quite a very strong trend leading into the pattern. Here we have the left shoulder, here we have the head, and here we have the right shoulder, and we have a well-defined neckline between the shoulders and the head here that we've drawn here, and we've now had the breakout down below that neckline. So there is strong potential for this market to continue to the downside. What I like to see with when these patterns are established and we have the breakouts, confirmation of the pattern is a breakout down, a close down below the boundaries of the pattern. So we have had that close. If the market failed to close down below there, then that would not be confirmation of the pattern, but a close down below the pattern is confirmation of the pattern. And adding more weight to the probability that the pattern may continue as a reversal is the fact that we've had a fairly bearish close down below there as well. So there is potential for the market to continue down. Now, the target for this pattern is the distance from the top of the head to the neckline projected down from the area where the market broke out from. So that area, it's roughly 81.40 down to about 79.60, which gives us an area roughly, let's say, 1.8. So the market broke out at 80, so we have a target of 78.2, which is down around here, the area within the cloud. So if the market does continue to trade down, a potential target is roughly about 78.2. Bear in mind, though, that there is solid support all the way down towards that area. So the market may not trade down there to there all in one go. There may be some areas where the market finds potential support and relaxes for a while and then may continue down there. But it won't be easy going for the market to trade down there. Now, if the market doesn't go on with this head and shoulders reversal pattern, then if it retraces back up towards this region here that we've been trading in previously, that area there does represent very strong resistance. So the market will really do it very tough to trade up through that area. And that area extends from 80.4 all the way up to 81.4. And we can see, just looking at all of the shadows, the very strong shadows on the top of these candles, that there was so much selling coming as the market attempted to trade up within that zone, that it's unlikely that the market will be breaking that area in a hurry. If the market does trade up into that area and we do have a solid bullish close up above the 81.4 level, then that will be very, very significant for this market because of the strength of the selling action coming in when the market traded up there. But it's unlikely that the market will interact there over the next few days or week or so, and the market is likely to test some of these support areas over the next few days.